Hey, what's up guys? This is ZQ Chu here. So today we are going to break down the powerful candlestick pattern. So candlesticks or price action are the core of all chart reading and trading. So in this video, we're going to dive into candlestick patterns, what they are and how can you master them. So I'm going to guide you through the understanding of candlestick patterns like a seasoned trader. Whether you are just starting out or maybe you are feeling overwhelmed by the tremendous amount of candlestick patterns out there. My promise to you is that by the end of this session, you're going to have a clear and a simple method for interpreting candlestick patterns without the need to memorize every single one out there. So if you're ready to level up your trading skills, this is the video that you don't want to miss. First off, what are candlestick patterns? So, candlestick patterns are like a secret language for traders. So, they show how prices move and make it easier to predict market trends. So, think of them like a visual cheat sheet that's way better than the boring, say, the bar or the line chart. So, by looking at the colors and the shapes of the candlesticks, traders can spot trends and figure out what is coming next. So whether is it, say, for Forex, stocks, commodities, indexes, crypto, candlestick patterns works across the board, showing price data in time frames as short as even a few minutes or as long as days, months, or years. Now, each candlestick consists of what? 4 price points. The opening price, the high, the low, and the closing price. So the high represents the highest point that the price reached during a specific period, right? While the low indicates the lowest point within the same time frame. So these price points are crucial for analyzing all these candlestick patterns, regardless of whether, say, you are trading the daily, the weekly, the monthly, the hourly, or the minute time frames. So let me break it down for you. Candlestick patterns, typically, they use 2 primary colors, the green and the red. So sometimes these colors may appear, say, as white or black, depending on your chart settings, but they are commonly represented by the red and the green. So for instance, if you take a look at this green candle here, when you see a green candle on the chart, it signifies what? It signifies that the price has closed higher during the specific time period it represents. Look, I'm going through the basics here. So if you know this, it's fine. But hey, this grows, right? This grows until you become really advanced, all right? So bear with me for a while if you are a seasoned trader already, okay? So now, let me break it down further. The opening price of the green candle is always located at the bottom of the candlestick body, like this point here. Meanwhile, the closing price, which indicates where the price ended within that specific time period. So let's say if this is a 5-minute chart, it opened, let's say at 9 a.m. and then by 9:05, it went up during that period and then it closes there. And then the new bar form. So it could be the 5-minute chart, it could be the hourly chart, the daily chart, the weekly chart, the monthly chart. It just represents the start of that bar and the close of that bar of that time period. So now, these lines you see above and below the candlestick body are known as what? The wicks. So the upper one, the one at the top, is called the upper wick and the lower one is called the lower wick. So the upper wick shows us what? The highest point it reached during the period, and the lower wick shows us the lowest point it reached during the period. Now, you might be wondering what exactly is meant by the time period. So which is what we have talked about just now, right? The 5-minute, the 15-minute, the daily, the weekly, the monthly. So now, when it comes to colors of the bars, it is important. A green bar means that what? The price has closed higher for the day. It closed higher than the opening price, right? While the red bar is the other way. The red bar means that what? The price has closed lower. So it means that the day started with the price here and then at the opening, and then after that it ended there. So lower than where it began. So if the open is at the top and the close is at the bottom, that's where it creates the red bar. Now, the high represents same thing, the highs and the lows of the whole bar, right? So you get it, right? Green bar, red bar. It's very important. So now that we are clearing the basics of the chart. So it could be the 1 hour time frame, it could be any time frame out there. So it doesn't really matter. The representation is the same. It means that what? The bulls are stronger than the bears if it's a big long green bar, right? It means during that point in time, there's a lot of buyers in the market that keep pushing the price up higher, forming a big strong green bar. That shows what? A lot of buying momentum in the market. And that means what? Means the market is likely to continue upwards. So now, all of you who kind of dabbled in candlestick patterns for a while, you will face this problem. And what is this problem? Is that there are so many patterns out there. You have the 3 white soldiers, the bullish engulfing, the shooting star, the hammer, the harami, the doji, etc. I mean, memorizing all these really complexly named patterns, it adds up and becomes kind of like overwhelming. And trading successfully isn't about really like memorizing of all these patterns out there. It's about understanding what's happening beneath the surface, beyond all this stuff. The shifts in the market strength and direction, and how emotions influence the trend. I mean, this was a problem that I faced personally as well. Many traders will encounter something similar as well, right? So what is the solution to this if you don't want to memorize all the candlestick patterns? Yet at the same time, you want to know the meaning behind it. My suggestion is this. This is a simple strategy that I recommend. So whenever you come across a candlestick pattern that say you are not familiar with, ask yourself 2 key questions. This approach will give you a deeper understanding of what is happening in the market itself. It's like having a X-ray vision. Here's first question. The first question is to ask yourself, where did the price close relative to the range? So this question will help you to determine who is in control of the market, the buyers or the sellers, or neither of them. So let me explain how this works. Take a look at this green candlestick pattern. It shows that the price closed higher for the time period. So the candlestick opened here and then closes here without any lower wick. So essentially the opening price is also the lowest price of the day. And if this is say a daily candlestick pattern, it means the opening price is the lowest price for that day itself. Now, notice the upper wick here. Price closed near the highs of the range. Now, what exactly is the range? To put it simply, the range is the distance between the highs and the lows of the candlestick pattern. So if you look at this candle, you'll see that the price closed near the highs of the range, meaning that it ended closer to the top of the candlestick movement. Since price closed near the highs, what does it mean? It means that the buyers were in control as they pushed the price up and they managed to keep it near the highest point of the range during that period of time. So now, here's another example. Here, we have a green candle that indicates that the price closed higher than where it opened. But does it mean that the buyers are still in control? To find out, ask yourself, where did the price close relative to the range of the candlestick? Look at the highest point and the lowest point that it reached during the time period. So in this case, the high is here and the low is here. So this line represents the entire range of the candle. So now, let's see where price closed in relation to the range. Considering the entire range of the candle, you will notice that the price only closed slightly higher compared to the rest of the range. What does it tell you? That at one point in time, the buyers were active at those highs. However, from those highs to the closing price, it suggests that the sellers, they step in and they push the price down lower. So this reveals that there is what? There is selling pressure present that indicates weakness in the market itself. So yes, while the price did end up higher for that period, there is clear sign of rejection and strong selling pressure, which limited the price increase during the range. So even though you close higher, this question now helps you determine who is dominating the market. Get it? So when you look at this candle, it suggests what? That the sellers have the upper hand even though it is a green bar. Now, the second question is, how does the size of this pattern compare to the previous one? So this question helps you to assess the strength of the move and determine whether is it substantial or it's just like a minor fluctuation. It's like checking if the market is convicted that this is solid enough, or maybe it is just a temporary blip in the market itself. Let me explain what this means. If you look at this chart, take note of the retracement indicated here. Analyzing it using the principles that we covered earlier, it suggests that what? The buyers are dominating. However, when you examine the range of this candlestick pattern, looking at the most recent candle compared to the previous one, you will see that its range, it's not like entirely different. Pretty much the same size. So it suggests what? There isn't a particularly strong buying interest behind this recent movement. In simpler terms, there is nothing remarkable or extraordinary about this. Now, when you compare this candle with the previous chart, this retracement, you see this big candle over here? Look at the size of the most recent candle. Look at the size of it relative to the earlier ones. This indicates what? Now there are strong conviction behind this move, right? Not only are the buyers in control, there is also a strong conviction behind the move. So now, when you look at this candle, right, this indicates the conviction behind the move, right? Whether or not is this move genuine. When you comprehend these two questions, you can now interpret any candlestick pattern that you encounter. So the first question is what? Where did price close in relative to the range? It tells you who's in control, correct? The second question, what is the size of the pattern relative to the earlier one? Now, here's a bonus tip for you. Candlesticks patterns are versatile. You can combine them across different time frames to visualize how the pattern looks on a higher time frame. Take a look at this example. If you observe a pattern on a lower time frame, so say like the 4-hour chart, where you see a bearish bar, and then it's followed by a bullish one. So now, when you switch to a higher time frame, say for example the 4-hour, right? Now you combine 8-hour time frame chart. The same pattern is going to look a little bit different. Now, when you combine them together, it resembles a hammer. So this happens because the candles, they're based on each time frame itself. So when you combine them, it gives you a different perspective of the market itself. To translate the pattern from a lower time frame to a higher time frame, you use the opening price of the first candle as the opening price of the corresponding candle on the higher time frame. So now, the closing price of the second candle becomes the closing price of that bar in the higher time frame. So now they combine together. In other words, the highs and the lows within these two time frames will correspond to the highs and the lows of the candle on the higher time frame, marking the range. So this will tell you the insights of the market dynamics of who is controlling the price action. So you see, even though there's multiple time frames out there, right, it's kind of all interrelated. The lower the time frame, the more the bars, the higher the time frame, the less the bars, but they all kind of combine together. But even when they combine together, they tell you what happened in between. But when you spread it out, you see the bars, you see the different kind of bars. But when you combine together, they kind of tell you the whole story. So it's pretty much the same. With this understanding, you can now understand how all the different time frames interlink together. So that's where you have a good understanding of the buyers and the sellers who has the upper hand in the market. Now, let's take a look at some charts. Take a moment to observe this. Imagine you are now glancing at this chart, right? And then suddenly, hey, this is a little bit confusing, isn't it? Now, one moment the candle is green, next is red. You might find yourself asking, hey, should I be buying or should I be selling? Like, what is happening here, right? I'm so confused. Well, the answer is actually pretty simple. Take the opening price of the first candle and note that the closing price of the second candle is slightly lower. So the highest point of the candle is here and the lowest point is here. Now, if you visualize this, what does this give you? It looks something like this, right? The price opened here and it closed marginally lower. So let's say we imagine this is a lower close. Then you notice that the highest point of the candle is actually here, which is quite a distance from the close. So I assume that there will be a very long wick over here showing price rejection. And there's a very tiny wick at the bottom, almost not noticeable. So let's just draw this little wick. I'm guessing that the price action on the 8-hour time frame will show me this price rejection, reflecting what I saw on the 4-hour time frame. So by scaling up to the 8-hour time frame, right, we can confirm the analysis, and that's where we see the rejection of higher prices, as indicated by this chart pattern. All right, so now let's do a quick recap. Number one, provide a visual representation of price action during a specific time frame, such as the daily, the weekly, the monthly, or even lower time frames, right? The 5-minute or 30-minute, doesn't matter. The patterns display the open, the high, the low, the close within the structure itself. So this will allow you to interpret market sentiments, and then that's where you can make the right decision based on the bar. A single bar itself can tell a whole lot of story. Number two, instead of trying to memorize every single candlestick pattern, this is where you can simplify the approach by answering and asking yourself these two questions. Number one, where did the price close in relative to the range? So this will allow you to determine who is in control. But it doesn't provide you with the complete picture yet, because you still need to access the conviction behind the move itself. This is where the second question comes in. What is the size of the pattern relative to the earlier ones? If the patterns are similar in size, it indicates that there's not much conviction behind the move itself. However, if the pattern is larger, 2 or 3 times the size of the previous candles, this suggests a very strong conviction behind this move. Got it? Now, number 3, I also share with you the method to combine candlesticks pattern from the lower time frame to form the higher time frame candlestick pattern. So it's like an additional tip. So if you are not sure what a chart means, just go up a higher time frame. So for example, let's say you are looking at a 2-hour chart and you're feeling uncertain, right? That's where you can switch to the 4-hour chart for better clarity itself. Get it? That's where you're going to have like a different perspective, and that's where you have a better understanding of the whole situation. So always go 1 time frame up if you are uncertain of what the chart means, because there's a lot of bars over there. Okay? So if you are 4-hour time frame, switch to the 8-hour time frame. So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you, right? Drop a comment below and let us know what you think or what you'd like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I've created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.